others as well. But as our market coverage continues, as does our battery of experts, they are still with us, and we'll be joined by one more. Gurmeet, Chadha of Complete Circle is still with us. We have Gautam, Shah of Goldilocks Premium Research coming in as well. Gurmeet, we'll talk to you about stock ideas, etc. But now that we're at a record high, and this is levels, etc. are something that Gautam tracks very closely. Gautam, how long before we get into overbought zones? For those who have missed out on this rally, do they get an opportunity at some point to enter lower levels, or maybe they have to bite the bullet, enter at these levels itself, and maybe continue to hold on?
I think overbought is a very relative and a very subjective term. And having seen the 2003-2007 bull market, we have realized that markets can stay overbought and yet continue to move higher. And this we've seen multiple times in the past. So given that, I think our markets have been overbought for a while, but there has been a sort of a rotational correction across stocks and sectors. But now we've come to a point where large caps, mid caps, small caps, all are doing well at the same time. And even as we speak, there are so many names which have come out of hibernation. Like, for example, the chemical space. The sector underperformed for the last 15 months, but they've beautifully come out of a range in the last 2 days. I see a big opportunity there when we've actually covered a few stocks for our clients. So, one should not focus so much on the index. I think this has become a very theme-specific, stock-specific market. And if you are in the good stocks, if you are in quality stocks with good institutional interest, you will get rewarded irrespective of the Nifty level.
Gautam, I was just seeing which are the stocks, right? This is the way that after that last Wednesday's shakeout, which are the stocks which have come back the sharpest, right? So three names stand out. Hindalco, it is much higher than where it was at the high point last Wednesday. I mean, this purely just momentum near term. There's Wipro. Wipro out of the blue has done very well. It's up about 9% in the last 4 days. Hindalco is up about 10%. And there's something like a Divi's Laboratories, which has done well. Anything stands out to you in terms of just momentum here?
I think the standout takeaway is really that newer names are participating in this rally.
Yeah.
These were all fundamentally sound companies, and now with them joining the party, and let's not forget HDFC Bank, given what it's done in the last 3 weeks, I think it's been single-handedly responsible in a way to take the Nifty to levels of 21,500, because even last Wednesday's correction did not have any impact on HDFC Bank. So I think newer stocks participating, banks doing well, IT doing well, pharma doing well, is obviously a good space to be in. But then, this is a seasonally positive period. Global markets are super strong. But I'm pretty sure as we get into January with earnings, there will be some volatility. So that's probably the only hitch I have at these levels.
All right. Nifty Bank also at a fresh record high just as we speak, above that 48,200 mark. Has hit a record high in style as well. We have HDFC Bank, of course, which has crossed that 1,700 mark in terms of a share price, just about 3.5% away from a fresh all-time high on, fresh record high on HDFC Bank as well. The Nifty has also managed to cross past that important 21,600 mark, touched it, and now is meandering just below it as we speak. Gurmeet, they say when everyone is greedy, be fearful. Are you fearing anything in a market where everything is moving?
So, Manglam, not really fearful. As I said, we are a little cautious in fresh deployment. I think I'm favoring more large caps right now. So look at, for example, M&M still trades at about 16, 17 times trailing, 14, 15 times forward. I think they had a very decent run till the market got a little put out by the RBL investment they did. If you see their tractor market share has inched up on back of new launches. I think government will up the agri budget more as we entered into the last year, which could be beneficial for both farm equipment and tractors. They're at 41.5% share. The UV share has improved to more than 18% now, almost making them the fourth largest. So they are hitting back there. Earlier they used to be 20%. I think now they still have an order backlog of almost 2.8 lakh units. I think this quarter would be good for them. We like that. There are a lot of agri names, agrochemical names, which we like, especially the ones which are more backward integrated. So one, the pesticide prices have stabilized if you do a ground check. Also, the crop prices would be better, which makes a good case for agri input companies. So I think PI has been on a lot of news on few Chinese companies launching the same product in 2025. I think the market, in my view, slightly overreacted. But when prices are expensive, such kind of reactions will come, and that's the risk right now everything seems to be priced to perfection. The railway capex, the defense names, you're already discounting next 5-year, 10-year order books. None of them have great execution track record to fall back into. A lot of it is uncharted territory. So some profit taking in names which have run up, let's say 100, 200% in last 6 months or 12 months may not be a bad idea. And maybe rotating back to some more value themes, contrarian themes, I think is a good idea. I think overall, next 2-3 years are very good for the economy. So we are keeping some powder dry, just like 5-7%. We're not really taking too much cash call just to take advantage of dips which you may get. You got one on Friday. I think there'll be more events like these as we head into the new year.
Right. Gautam, I wanted your views in particular on LIC. I mean, you speak about momentum stocks, etc. Now, this one has been a big underperformer in the insurance space itself. And now this month itself, suddenly it's got some funk back up almost 18% And last week it got that additional, kicker coming in from the can for minimum public shareholding being kicked down the road by about 5 more years as well. So what are your thoughts on LIC from a chart standpoint? Do you think it warrants a look at?
See, I think there is a rush of money into underperforming stocks. I think we've seen this trend, and market men seem to believe that because a lot of these fundamentally strong companies haven't done well, they will do well now. Everything is being painted with the same brush. But to be honest, I still want to stick to the larger private insurers. I think there's a lot better visibility, structural trend. But one point of bother here is the COVID numbers. I mean, we've been hearing about it in the last 4 or 5 days. Hopefully, things will all normalize. But if things do not go as per plan, insurance is a sector that can get hit. And we saw it happen in 2020, after which insurance did nothing for a year. So just because of this single reason, I think from a shorter term perspective, I don't think there is a trading opportunity. But the longer term thesis for insurance stays intact. So we love HDFC Life, SBI Life, ICICI Lombard. I think there are very big opportunities from a 3-year perspective. But 3 months, maybe take a step back and look at other spaces.
Got that. Gurmeet, Bajaj Finance, any thoughts? We reported that RBI letter to Bajaj Finance about their credit card with RBL, and RBI seems to be a little unhappy on that. And you throw in the fact about all this unsecured loan business as well, and Bajaj Finance is a large player there. What are your thoughts? I mean, I was reading a Kotak note. They've, on the back of what we reported yesterday, lowered their estimates generally by, I think, about 4-5% earnings cut. Your thoughts?
So, Prashant, string of negative news. First, there was some embargo on some digital products. Then there was an increase in risk weight by RBI. Then I think the co-branded card with RBI, RBI only gave a 1-year extension. And then, I think there's also some bit of overhang in my view with Rajiv now, going out and the new management coming in, whether you can sustain a 30% growth on this kind of balance sheet. I don't think so. On unsecured, they are too perturbed because less than 50,000 is less than 1% for them as far as the loan. So I think that's not there. It's just that incrementally, slightly, risk weight in general will lead to more, capital getting allocated towards that. And can, in the short interim, pull down a little bit of return ratios. Not much again, very marginal impact. Also, Prashant, as I said, it's the pricing, still trades at 6 times. Even Chola, if you stay, 5-6 times. Now, whether you want to give a 1 or a 2 book value to a 20% credit growth, 25% credit growth, or you want to give 6-7, continue to give that 6-7 multiple. I think that's the choice you have to take. So it's not that there's anything wrong. It's just that the market probably, as even Gautam made that point, likes HDFC more. You can get that 18% growth at 2.2 times. You can get that 20% growth in Axis at 1.8 times, right? So it's just the relative thing. And I think RBI will clamp down more on unsecured lending. So I think in general, NBFCs would slightly underperform private banks. The only space which will probably do well is the housing finance.
All right, and you'll be happy to know that Tata Consumer has hit a fresh record high as well. Gurmeet, you've been liking this stock for a very long time, up around 1.5%. In fact, it's done well this month, up around 9%, and most of the gains have come by just in the last 6 or 7 trading sessions. So if you pull up the chart of Tata Consumer, you will see a little bit of a give back from record highs, but nothing really to worry about. For the market itself, we're seeing a wee bit of give back from the record highs. Again, the Nifty is down about 20 points. The reason why it has happened is because some of these IT stocks, after a bit of a rally, have come in for some profit taking. Wipro, for instance, has now moved to the low point of trade. So we're seeing some profit booking out there. TCS2 has moved lower, and some bit of profit taking, or maybe a little bit of underperformance coming in from the FMCG pack. So Britannia is at the low point, as is Asian Paints, and ITC, which is a slightly heavier weight on the index from these three, is at the low point. So that keeps some of the gains that we're seeing in the markets in check. Thanks a lot, gentlemen, for joining in, Gautam and Gurmeet. What we'll do is take a short break, come back, continue our focus on the markets. A fresh record high is what we've seen on the major indices, the Nifty Bank, all the other stocks doing extremely well. Come back, continue our coverage on the markets.
CNBC-TV18, embarking on a quarter century of excellence.